And good morning. You're watching News Now. And before we go to our top story from the world of cricket, a quick check on the markets. Well, Asian markets have thankfully taken a bit of a breather today after that strong rally, which was sparked, of course, by that hefty U.S. interest rate cut. But the dollar has drifted ahead of the testimony from the U.S. Fed Reserve Chief, and crude and gold have also retreated from fresh highs, which have been set overnight. But oil was still, of course, supported by supply concerns, and gold also remains underpinned by safe haven bids. Of course, results are from the U.S. banking heavyweight Morgan Stanley on Wednesday reminded investors that credit crisis still had some way to go. Morgan Stanley posted a fall in the third quarter profit that missed expectations, while Deutsche Bank's chief executive has said the liquidity crisis would also hurt the third quarter profit at the German bank. So like we said, there may be a rate cut which could be temporary and which has, of course, got most of the equity markets across the globe on fire. But what's the way ahead? For a quick comment, we have Darius Kowalczyk. He's the chief investment strategist at CFC Seymour, and he's with us in our Hong Kong studio. Darius, of course, life after those amazing rallies in equity markets across the globe, it's now taking it a bit easy. But what's your sense on which way Asian equities are now heading from here on?
I think that global equity markets will continue to move higher for the remainder of the year because it is clear that policymakers in key economies will do anything to prevent a big slowdown in economic growth or market turbulence. Therefore, I'm optimistic about major equity indices globally. As far as India is concerned, we also see reasons for optimism because of slowdown in inflation, which may allow the central bank to actually think about cutting rates, and because the foreign portfolio inflows are again coming into the country. So our target for the end of the year is 17,000 for Sensex.
Okay, if it's 17,000, then it's another good 800 points from the current levels. What are you looking at on the index? We've seen some amazing performance and comeback by auto majors, real estate, interest-sensitive sectors are obviously running up on the hope that there would be some rate cuts in the offing. What are you asking investors to buy into at the moment?
I look at the Asian markets on the index level and not so much into the sectors, but definitely the companies that are sensitive to interest rates, such as the banking sector, I think should start to be really supported by the hopes for monetary easing. This is particularly so given the appreciation pressure on the currency, which gives more leeway for the central bank to think about lowering interest rates.
Right. Darius, any key concerns as far as Indian markets are concerned? Because at the end of the day, international crude is surging about $80. The political scene is still not completely stable. And in fact, the war of words between the Congress and the left only gets sharper and sharper. Are there any concerns as far as Indian equity markets are concerned?
There are a couple. The political situation is one of them. I'm also concerned about the negative impact of past monetary tightening on growth of exports and industrial production. Both of them have slowed, and this means that the pace of GDP expansion might have peaked for a while. So there is this concern, but investors in countries such as India focus more on longer-term growth prospects, and these remain outstanding. So I think that portfolio inflows into Indian equity markets will continue, and earnings growth will also remain very strong. And those two factors should underpin our expectations of a 4% gain for the remainder of the year for Sensex.
Right. Darius, my final question. How is the valuation of Indian equity markets as compared to some of their Asian peers? We are talking about a time when most of Asian equities are making new highs. In fact, Nikkei is in kissing distance of its previous highs that they've made recently, and Hang Seng is already at a new high. So how is the valuation of Indian equity as compared to their Asian peers at the moment?
They are quite stretched when you look at next year price-earnings ratio, which for Sensex is just above 20 right now. And this is the most expensive market except for China and Japan. Hong Kong is just behind India. But bear in mind that it's not only next year earnings that matter, but the longer-term potential. And when you look at that, given the almost double-digit potential for Indian GDP growth, I think that we are still at valuation levels that remain fairly attractive.
All right, Darius, we'll leave it at that. Thank you very much for slipping in a word. And 16,300, but Darius says 17,000 could well be in sight. Moving on, and let's now go back.